Where does China's real flexibility and resilience lie? It's not about simple quantitative tools. It's about the fact that, throughout our economic development, the biggest driver in China's total factor productivity has been institutional cost advantages, our institutional dividends. It's about our commitment to openness and ongoing reform. We remain committed to a market economy, allowing the market to play a decisive role in resource allocation. We support market-oriented competition, avoid ownership discrimination, and ensure equal treatment for all market resources. We support the private sector's development, genuinely recognizing and affirming its role, including legislative protection. The private economy plays a foundational, leading, and institutional role, fully acknowledged and safeguarded. We recognize we don't differentiate between domestic and foreign investment, nor state-owned and private enterprises. We don't practice joint venture discrimination or ownership-based distinctions. We implement a fair competition law. In reality, our economic development involves two dual entities, domestic and foreign, state-owned and private. Regarding financial, land, and other resources, there's an unequal status. Resource allocation isn't truly market-guided or directed to the most efficient areas. Instead, due to ownership differences, everyone receives different treatment. Environments have different competitive conditions and capabilities, so potential misallocation often arises. This is a persistent challenge in future economic development. However, this flexibility and resilience are exactly what our institutional reforms are about, so we need to uphold persistence. We need to develop a market economy, focus on economic development, and adhere to the rule of law, using legal frameworks to protect market competition and participants. This way, we no longer overemphasize Chinese characteristics. For example, valuations now have Chinese characteristic valuations. As long as something is labeled Chinese characteristics, it comes with an explanation. These explanations serve to justify why we are special. They serve specific policy objectives. However, in reality, things are not always completely aligned or in sync. This process does lead to significant policy errors, and it also creates a lot of transaction costs. So, this process will adjust the economy's overall development. Finally, I think the consumer service industry's development will inevitably face setbacks. It doesn't mean that just because our country advocates promoting domestic circulation, we will definitely stimulate it. Rather, global economic development experience, as well as China's situation this year, have shown our per capita GDP is about 12,800 US dollars, reaching the UN's high-income country threshold. This standard, unchanged for over 20 years, needs updating. Even at this level, our standard remains not high. Compared to the US, Japan, South Korea, Taiwan, or Hong Kong, a gap still exists. In some cases, the gap is several times, 7 or 8 times greater, and even smaller gaps are 2 or 3 times. So, even though we've reached the high-income country threshold, we still face pressures. We need to break out of the middle-income trap. As we move toward becoming a high-income country, we need to establish a consumer-oriented vocabulary. China is transforming from a production-oriented to a consumption-oriented society. Like other developed economies, all major developed OECD countries have gone through this process. They've all transitioned from a production-oriented to a consumption-oriented society. This is an inevitable path in socioeconomic development. It's also an inevitable result of industrial upgrading and transformation. So, as China transitions from a production-oriented to a consumption-oriented society, the consumer services industry faces challenges and opportunities. This sector's development will have tremendous prospects. Please don't just focus on or be influenced by certain things. Recently, our regulatory body has been implementing the red and yellow light policy to restrict consumer companies from going public. While everyone is emphasizing the ability to utilize financial markets, There's more focus on hard technology and greater support for the development of tech enterprises. However, I believe that such policies are actually a matter of favoring one side over the other. In the long run, consumption and technology are not an either-or choice. It's not a single choice or mandatory choice question. Rather, consumption and technology promote and develop each other. They are the two core engines driving China's economic growth, essential in fulfilling people's aspirations for a better life. So, going forward, we shouldn't be swayed by short-term market policies, as policy direction significantly impacts China. Many funds invested in consumer sectors over the past 2 years, but stopped investing once policy guidance didn't support consumption. We are professional consumer sector investors. We've done this for 16 years. Next year will be our 17th. I've worked in this industry for 28 years. We've never changed our original intention due to shifts, nor altered our approach from short-term adjustments. Our passion is investing in the consumer sector, committed to thriving and prospering with the industry. Consumption, especially in essential, high-frequency, livelihood sectors with infrastructure, is a necessity. Regardless of policies, as long as people exist, food, clothing, housing, and transportation remain fundamental needs. This doesn't change by anyone's will. Moreover, in the future, as we transition from a production-oriented society to a consumption-oriented one, this trend will only become more pronounced. That's why we are actually very certain and confident. We believe that such short-term, consistent policies, this provides good companies in well-managed sectors a favorable environment. China will see many emerging consumer service enterprises. This proves that in consumer services, strong cash flow and stable business mean less financing pressure. Unlike tech innovation, where profitability is distant, without financing or strong capital market support, these companies can't survive. The 4 AI unicorns are a typical example. Their IPOs show that if they focus on government or large business clients and are especially dependent on them, they can't truly succeed. They have little chance of spreading into the consumer market. Unable to generate market orders, many companies operate at a loss, facing tough post-IPO times and significant market value hits. So, for a typical company, should we focus on technological innovation, increasing core technology, supporting key engineering projects, and advancing progress? What is the purpose? Is it just for a concept? Of course not. As Kant said, people are the end, technology merely a means. Ultimately, human well-being is our true goal, and technology should serve welfare. So, technology and consumption are definitely not opposed. Choosing one or the other is not the point. They promote each other. Resisting consumption hinders technology. Consumption inevitably brings reverse development, restraining technology, so patience is needed. Like waiting for flowers, we must wait for policy changes. We need an internal economic cycle, promoting mutual development under internal and external conditions, boosting domestic demand as a fundamental national policy. Announcements still put red and yellow lights on the consumer industry. Liquor might be excluded, but even education and training aren't allowed. Bottled beverages, cosmetics, clothing, consumer electronics, none can go public. How are these industries to develop? Don't they have equal access to capital markets? I think doing this is definitely wrong, and doing it this way is just a band-aid solution, only addressing problems as they arise. These temporary measures also reflect something deeper. In our management, there is still too much micro-level intervention, deciding who can go public, who cannot, and which industries should develop. Shouldn't these industries be left to the market to drive their development? The market will naturally make the right choices. I think this is quite important, but it also requires patience to understand the market, which will bring about changes. As long as China's consumer service industry, from overall market size, economic development, the shift from production to consumption models, and future national policies, our main contradiction is the people's standard of living. The contradiction between the desire for a better life and unbalanced productivity development among groups is the main issue. What era are we in? An era of quality revolution is rising. In the era of good quality and low prices, we've only achieved low prices. We are not yet good. Chinese people haven't truly enjoyed good products and services. China's consumer service industry actually holds great promise. It's just beginning to show its potential, and true competition is only starting. China will definitely have its own L'Oreal and Estee Lauder, its own McDonald's, KFC, Starbucks. Industries like these create massive employment, generate huge tax revenues, and provide the largest platforms and financial support for tech companies' development and advancement. They provide the largest application scenarios. Global giants like Google, Baidu, Tesla, and Apple are all consumption-focused. The same applies to China. Companies like Alibaba, Tencent, Pinduoduo, and Douyin are core service and consumer enterprises. These consumer companies brought mature foreign experiences, products, and models to China, leveraging its massive population and the world's largest unified market. China's demographic dividend, market dividend, and unified large market have driven its rapid development. I believe that in the future, Chinese consumer service industries or brands can follow a similar path to achieve rapid success. They can gain opportunities in global competition. I am especially looking forward to the development of Chinese consumption.